Good evening, everybody. All right, just observe the obvious. There's nothing more to say other than as long as John, I think John or George would be rolling over. I always go back to the theory that our forefathers probably developed one of the best government processes ever, except one flaw, that you had to have humans running everything. So anyways, obviously there's nothing new to say because the market trend just keeps right on going. So the more you hear all these talking heads say that the pullback's inevitable, the more you like to hear that, because as you can see, there's been talking heads out there telling us that the pullback is inevitable for a year now. So this is why I always tell people, let the market tell you what the market is doing. Not listen to any one person or any one research group, because they have no more idea what's going on in the market than the rest of us. I have made my biggest money, or I've made all my big money, based upon just letting the market tell me what to do. All right, so anyways, that's the Dow, the NASDAQ, same scenario. I mean, there's going to be backing and filling, but it's just profit taking, not a full-scale reversal. So this is the reason I probably mentioned this before. The reason I have always been very comfortable with letting the market tell us what the market is doing, because the market is going to do what it wants to do, no matter what everybody predicts or what most people are predicting. The market's going to do what it's going to do. And I illustrate that back when I was a stockbroker back in the 80s. The Dow would go from 750 to 1,000, back to 750, back up to 1,000, back down to 750, and it did that for about 8 years. Now, a big day back then was 10 points in the Dow. And 10 points in the Dow is like 400 points today. But when the Dow was somewhere around 850 or 900 on its way back down, I can remember one idiot out there was projecting that the Dow could go to 3,500. And you're thinking, what's this guy smoking? How the heck is the Dow going to go to 3,500? Well, that was a long time ago. So, anyways, could the Dow go to, or the NASDAQ go to 10,000 or 7,600 or 12,000? We have no idea. So just keep trading on the basis that the market's going to tell you where the market is going to. Crude oil, still in this slow uptrend, staying above the T-line. That's the March contract. Gold, still in an uptrend, staying above the T line. And right now, if we're trading anything, there's a good move in live cattle. Just notice where the bullish doji sandwich occurred, right here at the 50, breaking out. Is GE the last original? So anyways, I answer some of the questions I got recently on our training session this next Saturday. I have discovered, well, first of all, I discovered a while back that people just learning candlesticks still have the process of keeping their emotions out of their trading. So once you learn how to trade candlesticks, you still have to learn how to keep your emotions intact so that you can make money. But then I also discovered that people were doing good as far as trading the candlesticks and kind of controlling their emotions, but there were still things that they just didn't have either the confidence and or the the pre-discipline. And the pre-discipline is that that there are things that you need to have in your mindset before you even start trading. And so that's what we're going to be concentrating on this Saturday. And Pat put out the promo that it was probably going to be 4 hours plus. There's probably enough information to make it pretty close to 6 hours. So it's going to be the type of thing where you don't even need to get out of your pajamas. Just get your cup of coffee and pajamas and plan on sitting most of the day in front of the computer. But the whole point of this session is to be mentally prepared for what you should expect, no matter what type of trading program you're going to be involved with. There are things that people just, and I say people, I was the same way. When I got ready to invest, it was just finding me something good to invest in and I'm going to make money. What I didn't learn was that I needed to know what to do when a trade wasn't working. I needed to know what were the emotional tug of wars that I would go through. Even if you have to go to a wedding Saturday, you can get the recording. I think that's the right sign up also. But essentially all you're going to have to do is sit back. Now, I usually tell people you don't even need to bring a pen or paper, that everything is going to be there. But what you might want to do is have a pad of paper, because there's going to be things that we discuss that you're going to be able to say, that's me. I do that, or I don't do that. And you want to write it down just so that you can go back and get reinforcement. We're going to be going through what you need to do to be mentally prepared for investing. I'm going to go through a bunch of trading rules that are going to be helpful to keep your thinking in line. And then I'm going to have probably at least an hour, if not an hour and a half, of observations of things that a lot of people say, well, what should I do here? What's this telling me? We're going to go through those things that normally occur in a price movement so that you're aware of them, and so the next time you see it, you don't have to kind of guess or figure out what to do. you'll have already seen it and at least have a game plan, or at least know what your probabilities are based upon that price movement. All right, I was going to find a bunch of good trades, which I do, but fortunately, we are in a bunch of good trades. We recommended DLRD or TLRD today because of this setup, and this is exactly what we're going to be going through again on will you have access to live charts so we can maybe give you some examples on Saturdays? Yes. Yeah, I can do that. Is it different than the information in your books or November webinar? Yes, Tom. This is again. If there's 3 steps of learning how to invest, step 2 is learning a good trading program, which I consider candlesticks obviously the best trading program. Step 3 is once you learn a good trading program, you need to kind of know what to do to control your emotions so that you're taking advantage of what the program is telling you versus letting your emotions step in. So that's step 2 and step 3. But step 1 is there are things that you need to have in your mind already before you even start investing. And that's going to be more of a instructional, I guess, of why you want to have a journal, why you want to have your trading management established before you even start. There's probably a good hour and a half worth of information, and that's just so that you get mentally set up so no matter what you're trading, you're already kind of prepared for that trading program. Now when you go into that trading program, not only are you educated on what you should be doing or shouldn't be doing, but now you can apply that to the trading program to enhance doing the right things. Exactly, D. And that was one of the things I always rhetorically asked years back. I would say, where do people go to learn how to invest? And there wasn't any place. You obviously didn't learn how to invest in a college course, because if there was somebody smart enough to be successfully trading, they wouldn't be teaching a college course or a high school course. They'd be off trading for their own. So there was very few places, and even today, I know we have a lot of good guest speakers on, but as you notice, those guest speakers are telling you how to utilize their trading program. Yeah, you could always go to Kramer. But there's nobody around that ever tells you there's no difference from learning to trade skill like a plumber. The only difference between trading learning the skill of a plumber has logical things that you do to fix things. Unfortunately, investing is completely different because it is working off of your emotions that are completely backwards. That's why the Japanese rice traders pretty much illustrated where do most people sell? They panic sell at the bottom. Where do most people buy? They buy exuberantly at the top. So anyways, we're going to be going through the pre-learning of investing so that when you come up with a good investment program, when you're in the pool, you're in the money. That's right. When you're learning how to ski, you've got to kind of learn backwards. So anyways, with that, we're also going to be, once you learn how to do that, and then how to apply that to candlestick analysis, and the most important part of that is we're going to go through a lot of charts to say, all right, where is our high probability trade setups? And that's obviously seeing a fry pan bottom right at a breakout level. That was our recommendation on TRLD. Same thing with Square. Make this a little bit bigger. We could see the pattern set up. And this is why I call this convergence analysis. The more pieces of evidence that we can put on our visual analysis, I mean, we don't have to sit here for 5 minutes and say, oh, this is a good trade. We can look at this and almost in 2 seconds say, yeah, this is going to be a good trade. Why? We got a bullish harami right smack dab on the 50. We've got what looks like a J-hook pattern setting up. We've got a doji gap up showing a lot of strength. Now we're right here at a breakout level, and we know our doji rule, that if it opens positive, it's going to trade positive. If it trades positive, it's going to break this level. So we've got all the ifs and thens already visually set up for us. So that's going to be a major portion of our, I'm going to say a major portion, the final portion of our analysis on Saturday is once we've got our mental process established and we've got a program that works well, then we can do our analysis to tell us, all right, where is the high profit trades and where's the high probability trades. So the reason we recommended KODK last week was very simple. Not only do we have a pattern, a J-hook pattern that we can identify, but what's the magnitude of the potential return? Well, if they've moved from 3 to 13, did the profit taking, there's a good possibility with the magnitude of movement of this initial move, they could take this up to the $20 range. So not only are we able to visually recognize when a pattern is working, but we want to know which patterns are going to produce the most profits for us. We recommended CLLS based upon the bullish flutter kicker potential. Well, it didn't convert the next day, but when it opened positive today, what was it telling us? It was telling us that the force of this signal, starting the bullish flutter kicker signal, was still in progress. So we can, with that education of knowing what should be working and when, we put ourselves in situations where the probabilities of being in the right place at the right time is greatly more in our favor. We know the simple rule: the bigger the signal, the more compelling there's going to be a bullish signal. Then what's our analysis after that, as long as it stays above the T line? So these are all trades that we are in, and usually I have a watch list of, it would average around 37. That's including the indexes, and then usually the stocks that are coming and going. You're dropping some off as they get closed out. Right now it's at 51, which basically means, because of this, the length of this uptrend, we can be buying buy signals and holding them until we see a sell signal. But what's more impressive or more compelling is the fact that the more we see buy signals, the higher the probability of that trade's going to work, because there's no major change of investor sentiment in the overall market trend. This also helps us in situations like this where we can see the uptrend is occurring. Notice our bobble breakout. Just that alone, knowing that one pattern or that one trade setup, you note there's an extremely high probability that if it breaks through the resistance level, we're in an uptrend. Then what's our Yes, and that's another thing, Rick, is if we can analyze which direction the market is going, go with the flow. Now, are there situations right now that you kind of use as an offset to just make sure you're not long 10 positions? Definitely. Right now we've got a short position on ACIA because of the evening star signal up here. IPHI was another short. So we've got a couple short positions on just for that extra protection that we don't want to be 100% long, because if we see a day where all of a sudden we got a huge sell-off, we want some of those short positions to help us to kind of offset that selling while you're closing out some of the long positions. How long do you wait before you switch from a slow horses to fast ones? That's another element that we will be working on over the weekend, and I'm trying to think of what ones that we use for illustrations. Here's another good example of once it broke down through the T line and sold off, we close it out. Now, do we re-enter? Right now, it looks like we could re-enter if we wanted. But the question becomes, do we want to be buying back? If we bought right here and closed out as it came down through the T line here, do we want to be buying back here? That becomes the question of, is our upside potential better by coming back into this position here, or are we better off going out and finding a chart that looks like this that have two things going for us, where the upside is still potentially huge because you're in the oversold area, or do we want to buy back something that is kind of up here in the overbought area? So that's rigid. That's something that we'll be working on, is that evaluation. So there's that, and I know that, and that's part of why I can teach it very well. I would come out of a position, and then I'd wonder whether I should get back in it. And sometimes I jump back in it, or sometimes I jump back in it here and then have to come back out again. So that made me realize, do I want to be in this position here with stochastics starting to go this way? Or do I just say, all right, I've made some money with that trade, go on and find something like this? And that's kind of what we're going to be walking through. If I see a strong sell signal, and we're not below the T line, but this is going to be that part of the supply and demand function of doing our own charts. Let me get to another chart just to see if I can. Boy. I guess a quick answer to that, IKP is, if it looks like it's time to come out of a position, even though it's a strong sell signal, and in this case, let's say there was a strong sell signal or doji sell-off, that if these moving averages weren't here, or the 200 wasn't here, I might say, all right, let's take our profits and go find something that's more like this. And another function is, let's say this, another function of a sell signal in the overbought condition is, if you're moved a good distance away, let's see, I think I have one. I think it was SQ. If you've moved a good distance away from the T line, and it opened here the next day, yes, I'd probably close it out, because that's a sell signal. Even though we were still above the T line, that was telling me the probabilities were getting pretty close, or better that they're going to move it back. So that's all going to be kind of a quick analysis to say, all right, I've got a big profit in this, and it's moving away from the T line. What's my game plan for tomorrow? If it opens lower, better think about closing it out. And if there's a doji gap down, I'm definitely out of that position. So these are all things that we're going to be kind of putting in our heads as to putting in our head. I'm reading what getting in our head of what we should be doing, getting away from hanging on to losing positions. Now, I often get people that say, I'm holding on to this one. What should I do here? This training is going to tell you what to do. And let me find something. Let's say you're right here. Say, oh, I'm still long. What should I be doing? You don't have to ask that question anymore. When I had positions that looked like this and I was holding on to something that I may have bought over here, now I'm right back to where I bought it. I look back when it was with candlestick charts, I could look back and say, man, there was a signal that told me to get out. And I would not only say that to myself as that was a signal, but I'd have to realize that's the whole reason we were learning the candlestick signals. If we see a good doji gap down in the overbought condition, the Japanese rice traders say that's time to get out of that position. Why am I still holding on to it? So that became kind of more of my built-in discipline, that anytime I saw that and it looked bad, I'd close it out. Now, are there times I'm seeing Diana saying I had SQ calls expiring this Friday. I sold them today because I didn't know what would do tomorrow. You could do that, or some of the other things that we're going to be going over is got big profits in calls, but there's nothing yet to tell us that it's not going right up to fill this gap. But there's lots of times where I run into a situation where it starts to look a little bit iffy, but not conclusive that they're ready to sell it off. I'll sell off half the position because at least I can mentally rationalize to myself, yeah, I took some profits. Now I can see what it does tomorrow. But if it's still moving in the same direction, I'm going in the I'm still making a profit even though it's not fully exposed. I'm getting better at taking quick small losses when candles go south, but I still take profits way too early. Many times with no sell signals and miss out big time. Yes, that will be part, and I can just tell you real quick, John. I'd rather wait for the sell signal, because the probabilities tell me that if I don't have a sell signal and I'm not in a situation where I'm not overbought, the probabilities based upon analyzing the charts, there should be some more upside. I've flipped the private messaging back on, but I have to close out the room for it to kick in. So whatever happened this morning where the chat talk went underneath the wrong column, I didn't check them all, so I'll after tonight's session I'll close the room and then open it back up, and everything hopefully will be fixed. Okay, we're not even on. Where are we? So here's a case where we know one of the simple moves is that if it goes through a resistance level, they'll come back and test it to act as, see if it's going to act as support. So I might take profits here to see what it does once it gets here, because I don't know whether it's going to continue right on back down and have to put a Fibonacci retracement number on, or see if it's going to support at the 34 or the 50. Worst case scenario is I see what I expect it to do, a J-hook pattern, where it's using the support or the resistance level now as support, bullish Harami. I can be buying with more confidence on positive trading, even though I might be buying at or above the same level I sold. At least I know that I'm not holding on to something that has the potential of going this way, but I'm buying something that I know a J-hook pattern is telling me we're probably going to be going this way. GCO, another kind of bobble breakout that all we can do. And if you've got 10 positions on, and you've got 6 of them that look like this, it takes 1.28 seconds to flip this chart up and say, nothing here, stay long. Then you can go on and be analyzing something that might need more time to analyze. Odd, same example. There's our Morningstar signal, sitting right smack dab at the T line, closed right here. What can we analyze from this? Well, obviously the stochastics are coming back up. It did a best friend breakout, consolidated. Now it tells us the consolidation's over, and we observe the obvious. The obvious is there's a wee little resistance level right there. So if this opens positive tomorrow, what's it basically telling us? If this resistance level is not acting as resistance, that this pattern is probably in place, we've got the prospects of a very a good price move. Yes, going into wave 3. So the huge benefit, again, I've got people that say, no, I've got good trades on that were based on candlestick signals, and then I've got bad trades that I'm holding, and I don't know what to do. I know I should have sold them earlier. That's what we're going to kind of go through. There are very few times, but there are a good percentage of the times where if I've got 10 positions on, I know on average that hopefully 5 or 6, 7 of them are always going to be positive, with 1 or 2 trading flat, maybe 1 trading lower or 2 trading lower, but not doing a reversal. But right now, I've got 2 short positions on and 8 long positions, and so I can go through a day where 9 out of the 10 positions are trading in the right direction. Now, how did we get there? Because there might be situations where you've gone long on something, and when it pulled back and went the other way, you closed out and moved to something else that looked more like this. The wheat futures. All right, that's it. So anyways, Labu, as we can see. Is there anything obvious about this move today? Yes, it broke through this upward trend with a gap up through the resistance level. That tells us we want to be buying Labu. Could be, but it also telling us there's probably a lot of good biotech stocks out there that you want to be buying. On the other hand, you got something like Nugget that's not telling you much of anything. It's kind of in a possible trading channel. So that's pretty much telling us that we probably don't want to be trading too much of the gold stocks right now. But things like the biotechs, like Blue, we were prepared for this one because of the bullish flutter kicker. We didn't execute on this day, but when it was gapping up, what did we have? We had a bullish flutter kicker that told us there was a strong uptrend, and then it was gapping up to this level. What was our first potential? Well, maybe a bullish flutter kicker, or maybe a trend kicker signal. So I always come back to the rhetorical question: do you always catch big moves using candlestick signals? The answer is no, but it puts you in positions by knowing what should happen at different time or different opens of what type of signals are happening. Amazon, J-hook pattern. NVIDIA, J-hook pattern. Apple, probably the least of the potentials right now, because it didn't break out anywhere right in here. So it's telling us we're still kind of in a sideways, slow sideways. So Apple would be the least one to be traded. Netflix, again, this comes back to the question, do we buy if there's an earnings report? Well, remember, people a lot smarter than us are making their decisions today of whether to be buying or selling based upon what Netflix earnings are. Most of the time, they're going to be trading in the right direction. I think Netflix was trading up in this range after hours, if I'm not mistaken. VITA, there's your bobble breakout. You stay long on this one. I am still hesitant on trading the bobble breakout. Is there other criteria or confirmation that you would help to identify the stock? No, Tim. If you're hesitant, I guess the first thing you should be aware of is just me saying that if it breaks out, you've got a high probability of a good trade or a profitable trade. Because if you took the resistance level out of here, you basically have a J-hook pattern. So when I have time, which I haven't, if somebody would like to do that, just do a research thing where they see a bobble. What's the percentage probabilities that bobble breakout is going to create not only a profitable trade, but a very profitable trade? RT, yes. You might have, remember, you're not quite in the overbought area. Remember, the only time that you start using the 10-minute T-line is when you see something that you know everybody else is watching. So even though this had see, I wouldn't have sold out here, because what did this tell us going into the end of the day? There was probably some profit taking. But what was it telling us about the daily signal? It was still way up here at the top of the range. So now, on the other hand, look what happened to Tesla today. Wow. Is that not the right one? There was something today that came up right to that was a shooting star in Tesla. But there was one that was much more obvious. Now here's a situation where Fossil, tell what was happening at the 200. They were selling it off. But now, what do we do with that? First thing we look at is we don't have a sell signal. That's not a bearish dark cloud. It's not a bearish Harami. That's just selling in an uptrend. So what's our criteria? We stay long as it stays above the T line. Oh, Pashal, there was something that went right up to the 200 and then started selling off, and it stretched to get to the 200, and I was going to illustrate that by that's when you flip to your 10-minute chart. Yeah, the fossil could be a T-line crunch move, yes. Was it overstock? No. It was something that just went up. Maybe we'll come across it. Oh, I know it's probably in here. But when it hit the 200, that's when you flip your 10-minute chart. You were up in the overbought area, and they stretched it up to the 200, which is obviously where everybody else is watching to see what was happening at that level. Okay. NVIDIA, Apple, Netflix, Tesla, Fossil. We bought VSI, or recommended VSI the other day. There's your coming right back up. Now, if you bought it on this day, you stay long. If you're looking to buy it, here becomes your next criteria. Where's the probability of a breakout? Right here at that level. You can still be buying this one based upon your fry pan bottom J-hook pattern. So again, what we're looking for is where is our high probability entry strategies. So if it started trading up through this level, number one, it's going in the right direction, and number two, it's at a level that other people are probably watching to see if it's breaking out through this congestion and this resistance. So we're trying to identify which stocks have the buying pressure coming in. Notice what's happened here on CENX. We recommended this one last week, and it hasn't been able to close below the T-line. Even more importantly, look what happens every time it opened lower. Came right back up. This is still a good trade setup with a wave 1, wave 2, going into wave 3. NS, New Star Energy. Same scenario. When you can identify, there's our classic fry pan bottom J-hook pattern. Wave 1, where do you think wave 3 should take you? Right up here to the 200-day moving average. Whiting. There's your bobble breakout. And how did it get there? Again, this is adding as much element of candlestick evaluation as you can. You had a doji sandwich breakout through the bobble breakout area. What's the next criteria? You stay long until you see a sell signal and a close below the T-line. Okay. Did I miss anything here? Jason, I think you might be right. That was it. Okay. This was the trend line. Thank you. All right, let's go back to Tesla. All right. Trying to figure out what I was thinking here. Just as we started hitting that level, and wherever you want to draw it, as soon as it got up, and you could see that there was the top of the trend as well as kind of pretty much a parallel to the bottom of the trend. As soon as it got up here, that's when you flip to your 10-minute chart. This is going to drive me to drink. I think we could have gotten that a little bit closer. But as soon as it got up here, I think I had that drawn right to where it just hit. Then you had an evening star signal. You held on to it until you saw that it wasn't going to come back up. You take your profits. When could you buy back? When you saw a buy signal and it came back up above the T-line. That's right. Anyways, all right, we're still working on the ones that we've got in different portfolios or recommended. There's kind of that little J-hook scoop type pattern on CVRR. So if you came out here, you were back in here. If you held through this area, you stay long. Splunk was another one where we had calls for January. We closed them out and rolled them over into February because the pattern hadn't finished. And Overstock. Overstock was acting well early in the day, but backed off. Well, this is not even looking at the right thing. What did I just do before that one? Splunk. That's pretty much the same as what the 10-minute chart looked like. Splunk we just have held on to. Radius, big fry pan bottom, J-hook. And what type of pattern do we have right here? You call recommendations. Sophie, yes, over in our options room, we've got a few recommendations on right now. I can think of them right offhand. I know we recommended Square calls, SQ. We've been in NKTR. We had to roll those over into February's. There's a couple more. I just can't remember what they are right now. Oh, Blue. Blue, we put out that recommendation in the chat room the other day, that if it traded above this level, you bought the calls, and obviously that did well. How to find option room. Never answer this question. There you go, right there. Calling, get with Abraham, and he'll tell you what the setups. There's a separate fee for that room. Again, the reason we don't promote it is we're not trying to gouge everybody, but we have the options room because the options terminology obviously is a lot different than regular stock terminology. So we made separate rooms. We got quite a few good traders over there that do all sorts of trading strategies, from the spreads. Nora just makes everybody rich with some of her recommendations. So there's lots of good conversation over there. It's not nearly as active as the regular chat room, but when something's said, it's usually something you want to take a look at. And CMCM, you can see where it's supported. Morningstar signal right off the T-line. Your uptrend remains in progress. And how did this one start? With our obvious left-right combo right on the moving averages, and they confirmed by breaking this downward trend channel. Just makes for very easy, high probability trade setups. And GLYC, we've had this one for a while. We knew it was a fry pan bottom. Then it broke out. But we have one criteria on a fry pan bottom. Once it breaks out, all you have to do is stay long until you see a sell signal and a close below the T-line. It costs a lot. Oh, CB... Oh, no, it's cheaper than the regular size. It's just an additional. Most people Diana, are in this one, and then they add the options, so they're in both of them. So you're probably seeing a few people right now kind of commenting. Rick, one of them, I think, and there's few other people in here that are in both rooms. Oh, let's see. I think we started buying on the breakout right here. As your fry pan bottom broke out through the 50. I'm not even sure we didn't start buying right down in here, and then it finally broke out. Oh, I think the options room, if I'm not mistaken, is like $59 or $60 a month. Oh, okay. Was it $99 for both of them? Could be. Check with Abraham. I don't even pay attention to that side of the things because I've got enough that will keep me busy over here. INSEE. This is observe the obvious. Where was it time to start taking profits? When they started gapping it up and were that far away, that's when you flip to your 10-minute chart. Now we've got a pullback and a Morningstar type signal closed right on the 200. What's it tell you if it opens positive tomorrow? That they're confirming the Morningstar signal that broke through the T line and that the 200 is not acting as a resistance level. NEOS, fry pan bottom, you just stay in this as long as it stays above the T line, and you're pretty much right in the area of a breakout. So you want to see this one stay above the T line. ARNA, obvious. Right off the 34, but you're right here on the T line. If it opens positive, what do you got going? You've got the bullish doji sandwich breaking out through this downward trend channel. What was the other one that was doing that? Was it odd doing the same thing? I know Nora said she started after Roku today. There's one to keep an eye on just now breaking out through the T line. Let's see, some fry pan bottoms. Oh, that's nice. Somebody was asking about this one today. You see how got kind of a bigger fry pan bottom, but right here you got that slow fry pan bottom. So if you're buying this one on positive trading tomorrow, your first obvious resistance level is the 50-day moving average. Fate. Oh, I don't know why I have that one here. But you can see how you had a wave 1, wave 2 going into wave 3, and IOVA is kind of an example of what happens coming out of a fry pan bottom, especially when you can see there's a kind of a resistance level. This is where the exuberance starts. Now I have people saying, well, you're recommending some stocks that are already in the overbought area. Remember, we're buying the signals in the oversold area. We're buying the pattern breakouts, which are usually in the overbought condition. FTR. Maybe that was supposed to be. You can see kind of the cup and handle. This one you can be buying. Where's your first logical resistance level? What happens when it gets here? DVAX. Remember, the bullish harami is like a barometer. Notice where this bullish harami closed. At the top of that previous candle. If it was a wee little bullish harami, down here at the bottom, your trajectory may have come out like this. when they close it near the top, that tells you there's a lot of force starting to come back in, or the selling has stopped. Your upside potential is going to be a lot more. Okay, all right. Oh, big breakout. And where did the breakout occur? With the bullish Harami right off the 200. Look for more on nuance. SRNE. This is just to give you an example of what happens coming out of the J-hook pattern. Wave 1, wave 3. Now you've had a gap up in the overbought condition. That tells you get a little bit more watchful. At least you have your safety stop right there. Well, that was another thing. No, not so much heavy. Now, that's another thing we're going to be going over. We keep bringing up kind of topics that we're going to be addressing. Every money manager tells you to diversify. That always makes me laugh. Because why do they tell you to diversify? Because if you have one sector that turns bad on you, you have the other sectors that are you're staying good on. This is ATRA. So what's that tell you about their management style? This tells you we're going to put you in a lot of different stocks. Some are going to go up, some are going to go down. So our idea of diversifying is so that you don't have all your money in places where if it went down. My idea of diversifying is if I've got 10 positions on and the biotechs are running hard, I might have 3 biotechs on. Then I might have 2 trucking stocks. And then I might have 2, I don't know, 2 other sectors. Because if we're sitting here watching them, what stocks do you want to be in that are acting the best? You want to be in the ones where the sectors are acting the best. That's right. And whenever I hear a money manager say, oh, you want to be diversified because you can't project or predict what the market's going to do, get away as far as possible, because we've seen, obviously, the Japanese candlestick charts pretty much tell you what the market's going to do. This is Abercrombie Fitch, broke out nicely. That tells me we've probably got some more upside. MRNS, little scoop type pattern. There's your bullish engulfing, followed by a doji sandwich, closing above the T-line, the 34 and the 50. Where do you think your next likely target's going to be? Well, you back up in this trend. Is that worthwhile? No, just to come back up here looks like about a 40% upside potential. Oh, where am I? HCLP. J-hook pattern. And is this a significant J-hook pattern? Doji gap up. Trend kicker gap up. Wave 1. Wave 3 starting with very strong signals to the upside. Oh, Shaw. Long buttons here. GNC. There's your best friend. Get rid of this. There's your consolidation. This is another thing we're going to be illustrating. We've already done a session one weekend showing you the high probability trade setups, especially on big price moves. Very simple. The statistics tell us that if it opens positive, you've got, I think, a 90% probability it's going higher. If it opens lower, you've got a high probability you want to be out of the trade, and you don't get back in until it comes back in up through this level. So if this opened positive, what are the other ramifications? You got a best friend showing you a lot of strength. You got consolidation right back to the 50. Now you're breaking out. Where do you think your next target's going to be? Right up here. Hold on, I just got a couple more, and then we'll take individual stocks. Eames, another bullish engulfing, right smack dab on the 200 up through the T line. There's your classic. If this was a 7.25 to 10.25, that means we should be getting up into about the 1250 area. And one more, IMMU. Where's the best place to buy? As it comes up through that level, what's that tell us? Wave 1, wave 2, going into wave 3. So, the reason I'm pointing this one out is, if we can see where the pattern, double doji, gap up, if it breaks through that level, that tells us exactly what's happening. We have a high probability that we're heading in that direction. Okay, I guess that's about all I got tonight. Now, the other thing that I want to warn people, if you're making money in this market, don't think that you've all of a sudden become real smart, because there's lots of stocks. What you want to do in this market is, if you've got situations where, let's say you're looking like this, that tells me, I want to be closing out and go find something that looks like this. The more you keep cultivating out of iffy trades back into strong trades, the better off, or the higher the probability that you are going to have 8 or 9 out of your 10 stocks in the portfolio moving in the right direction. Okay, are there any general questions on candlesticks? Oh, Roy, I think we stuck it in here already. Try that one. Do you ever do an in-person seminar besides in the lake? John, I used to. If there's a group in an area that have maybe 60, 70 people that would get together, yeah, I'd come do a live session. When we see a close below the T-line, should we give it another day? If you've got something like this, where you can see there's been a consistent uptrend, you might give it another day, or you get ready to buy it back. This one's not a good illustration. Let's see. Not even sure if this one's had a... But if I saw, let's say, this day closed just below the T-line, I'd give it another day because of the history, that it's been a long uptrend above the T-line. This might just be one of those rare days where it closes below the T-line. Yeah, I used to travel around quite a bit, gave a lot of sessions in New York and Orlando, not New York, Las Vegas, the California cities. Yeah, they wanted me to come to Vegas this last money show. I just hate traveling anymore through the airports. Not so much just going through all the security alone, but you can sit at your gate on time, and if they're not an hour late, they eventually come out and say, oh, we've canceled this trip or this flight. Okay, I guess with that, Jim, let's go ahead and do the double line. And in 3.1 seconds, do another double line. Somebody was asking, the whole point of these training sessions on Saturday is not to just, I don't want to say, convey a strategy or a point. It's to give you kind of a much more general analysis of your training or your trading perspective, so that you're not learning what to trade, you're learning how to trade successfully. Vladimir, are you going to come back to the lake sometime? UEP, nice J-hook pattern. I wouldn't be afraid to be buying that one, especially if it broke up through this level. Is this Pilgrim's Pride? Oops. Well, this is not working well. That's a good looking chart. Just observe the obvious. Wait to see what happens once it gets back up to see if it gets to the 50. Now your hammer gap up, usually an implication there's going to be some good strength. CMG, here's a good example. Well, shuz butts. Been buying my pens at the dollar store. They're excellent. I like the nice bold print, but they run out of ink so fast. So I fooled them. I bought a bunch of them. CMG. Anytime you're in an uptrend and you see them gapping it down the next day at or very close to the previous day's open and start trading it down, close it immediately. Pretty much telling you that there's been a change of investor sentiment. You have a little gap there. Now, notice how far away you were from the T-line. When they gapped it down, where do you think the first target was going to be? Back to the T-line. Oh, would you close it or short it? I'd be more apt to short it on weakness tomorrow. Now I've got criteria. If it opens weaker, you short it, and you just don't want to see it close back up above the T-line. So at least now you've got a format. CNAT, you can be buying this one if you like it. Kind of a slow fry pan bottom with a breakout. And V-cell. Just stay long. Got to get rid of all these little lines. Just stay long. This is a very easy analysis. You stay long as it stays above the T-line. EVH, same scenario. You just stay long as this stays above the T-line. ABEO, nothing. If you're short, you stay short. But you also, at this point, because you're in the oversold area, you've had a doji and a hammer. If it trades back up above this level, I'd close it out. Or if it opens positive, I'd close it out. Now, the criteria would be, I want to see what happens once it gets to the T-line. If it hit the T-line and started coming back down, especially if it came back down through the open of today, you could always re-short it. That would pretty much tell you they failed at the T-line. AEO, if you got out the other day, you can now have a double bottom with bullish haramis right on the 34. You can be buying this one with the expectation of wave 1, wave 2, going into wave 3. ConAgra, not anything wildly exciting because of the lack of percentage move, but if you like it, you can be buying it. It's just not going to give you a huge rate of return. More of an institutional trader. Trox, another one that's telling you that they aren't going to go below the 200. You can be buying this one. Just obviously watch to see what happens at the 50. HRTX, Doji in the overbought condition. You have your safety stop below today's low. If it comes down through there, the profit taking has started. So anytime you see that Doji in the overbought condition, get ready. AVEO, nothing. Wouldn't be long or short this one, just no direction. VRX, VRX, fat fingers. Stay short. Whoops. No, I goofed up. Hopefully I didn't goof up on a bunch of other ones. I'm going to go back, make sure I didn't do something. No, okay. No, alright, so it was just that chart. VRX. VRX, if you were short, you get ready to cover your short position if it opens positive. You're bullish engulfing. Looks like they're bouncing up off the 34. OCUL. Fry pan bottom, bobble breakout. Where do you think the next target's going to be? Testing the 200. Safety stop right now, just below today's low. PRGS. This is one where if you are long, that looks doubtful. Even though you haven't closed below the T-line, if it opened and traded lower tomorrow, I'd close it out, even though you haven't gotten to the T-line. Because it's probably telling you that it's taking it back to the T-line. Close it out. You can always repurchase it based upon another buy signal at the T-line level. BP Prudhoe Bay. Now that's a toughie. But once again, you can see the obvious where they gapped it up and did a doji. That's that distance away from the T-line. That's when you start looking to take profits. When you see a left-right combo, you want to be out of it immediately because the probabilities are pretty strong and they're going to take it back down. Right now, unless you're buying it for the dividend yield, I probably wouldn't be long or short that one. ATO, you can get ready to buy this one on positive trading. Again, when they start reversing, if you were short, you covered your short, then that's why I always say see what happens once it gets to the T-line. FANG, be ready to buy this one on positive trading tomorrow, breaking out. Alta, yes, that's a good looking short. Observe the obvious. An E or a kind of an E star signal with a gap down. I would suspect your first target is the 50. PTC, just stay long. You got a fry pan bottom breakout. Groupon. Groupon. The big price move, you closed it out. You buy it back if it comes back up through the close of that big move day. But you can see that it kind of consolidated back to the 50. Now and I'd even be a buyer of this if I wasn't in the first move, if it comes up through yesterday's close. EXEL. Morning or bullish Harami, smack dab off the 50. Is the 50 a consideration? Definitely, that's where the buying has been. Now, if it opens positive, it's confirming our little best friend through the T line. I'd be a buyer on strength. Is that SLX? The steel sector, stay long. Needs to stay above the T line. Mazar, nice little J-hook pattern, and again, you're right there. I'd be a buyer if it came up through whatever that is, say the $64 area. You know, LRCX. 45 degree, you just stay with it. There's your bobble breakout. Oh, who was asking? Tim, were you asking how good the bobble breakout is? We're going to be doing a session in February that a lot of people say, well, shoot, you have so many patterns and so many things to look at. How do we narrow it down? Or you put 2 or 3 stock picks out every day. How do we get them all? You don't have to. Let's say you have 10 positions on, and tonight one of them doesn't look like it's working very well. Now all of a sudden, with your own scanning or looking at the picks, you've got a supply of good charts. So if you've got one that looks a little bit iffy, you're ready to close it out if it doesn't do what it's supposed to the next day, because you've got a supply to go to. That you're going to improve your probabilities. But if there's 3 picks, you don't have to buy 3 picks. You pick out the one that looks like it's opening up the best, and then you just disregard the others because you're not in them. You're only concerned about the ones you're in. Alright, so you got a shooting star, doji, right at the level it topped out before. This makes your decision-making process very simple. If it opens lower tomorrow, what's it telling you? You've got a double top. You close it out. AMD, bobble breakout, you just stay long as it stays above the T line. Is OMF a symbol? That's a good looking chart. Morning star signal right on the T line. That's right, Rick. Then we also discovered the big bright light that was shining through the trees from next door. And Cindy said, oh, look at that spotlight. Thinking, spotlight that's up 6,000 feet. The moon is just horrendously bright. I mean, we could sit out on the deck at night and the moon would come across the water just like a huge spotlight. BlackBerry, this is observe the obvious. They started selling, took it back up, started selling. They're below the T line. You can be short if you want to be, with the idea they could come back to fill this gap. I definitely would not be long on this one. DHO, nothing wildly exciting here. I'd be more apt to go after it if it broke through all this congestion area. You need something to show that there's a new buying force. INOV, nothing of any greatness here. Probably at this point, I wouldn't be long or short. JNUG, just like the other ones, there's no direction to it right now. It'd be someplace else. CBay, nice steady eddy, doji sandwich, breaking out through this last peak. You stay long on this one. That's right. Nike, same scenario. If you're long, it has to open positive and trade positive. It's a nice little breakout. Consolidation. But if it opens lower, you close it out, it needs to open positive and get up through this level very quickly. We did Groupon, Verizon. You can be buying this one. You won't make a whole big percentage move, but probably more of an option play. And Zynga, nothing. You can't short it unless you already shorted it from way up. Nah. Again, notice your big bearish engulfing, bearish engulfing, bearish engulfing. You shouldn't be in this one. And nothing yet to tell you the buyers have stepped in. SPB, a slow, steady uptrend as long as it stays above the T line. Viper Energy. As long as it stays above the T line, you stay with it. DRP, nothing. No direction. Hasn't been any direction for the last 2 months. I'd be someplace else. Whoops. Juniper, nothing here either. You can look at a chart and not see anything real potential. You do have the potential of a scoop pattern, but it's still not very strong. I wouldn't pay attention to this until it broke out through this level, like the 29.50 area. Yeah, the dollar store. That's right. Steal all their pens. What's the definition of a redneck? Getting caught shoplifting at a dollar store. Well, I buy most of my wardrobe. DRN. You can get ready to buy this one. This is the real estate bullish. Yeah, looks like they're starting to pop back up a little bit. And L Brands, you can be buying this one. It's not going to make you a whole heck of a lot of money, but it's heading in the right direction. Just watch to see what it does at the 50-day moving average. Charter, just stay long. You can see the little J-hook pattern. Again, an institutional trader, so you're not going to make a big percentage. CBOE, just been a steady eddy for months. All you do is stay long as it stays above the T line. Slumberger, stay with this one. This is why you want to see what happens If you got out of this position, you bought it back. So these are the type where if it opens, you close it out. And you see it turn around and start coming back up, you buy it back again. So you missed out on 89 cents. The fact that they closed above the T-line told you the uptrend was in progress. Or you bought it back on a positive open the next day because that told you more definite that they were not going to close below the T-line. Freeport, another one that if you're long, you can stay long, but I'd be more apt to be buying it right here, telling me they've broken out into a new wave. Micron, Plum, I'd be, who was doing that one? Yeah, that to me is nothing. You're hoping something good's going to happen. I'd be someplace else. There's just nothing there. There's too many charts out right now where you know the direction versus trying to anticipate maybe there'll be a change of direction. Another one that if you were short, you covered your short today when it came up above the high of yesterday. What is today? A Friday. You can get ready to buy if you start showing more strength, kind of a scoop pattern setup. But I wouldn't be a buyer until they get back up above the T-line. IBM, another one that you can still stay short. There wasn't anything here that if you shorted on Friday, nothing today, they failed at the T-line. More than likely, they could still be heading down to the 34 or as possibly as low as the 50. Intel, if you like it, you can be buying it. You're not going to make a big percent off of it because it's one of the quintessential institutional traders. Doesn't move around a whole lot. Teradyne, we're in this one. I don't know why they don't have this one up on my, but there's a nice J-hook pattern. You stay long on this one. EGTX, another one that could be setting up a bobble breakout. If you're long, you stay long on this one. G-Pro, nothing. Drifting below the T-line, you're not going anywhere. I'd be someplace else. Juno was being bought out. So I don't know what price they're buying it out, but if it's getting close to the buyout price, close it out and move on to something else. Halliburton has a nice J-hook pattern. Notice the left-right combo starting the next wave. And is this Six Flags? Nothing wildly exciting. It's a slow, steady uptrend, but very, very slow. DRNA, nothing great, but you can be buying it on strength because you do have a little Morningstar signal kind of signifying a J-hook type pattern, but you obviously want to see it break out. And one more, Skechers, just a steady eddy. Where did that one go? Oh, closed it out and then we bought it back again. So this is part of that re-entry. Now, the reason we bought it back, even though it's had a big uptrend, notice what the re-entry was. A kicker signal telling us there was definitely going to be more upside. All right, everybody. Market still heading up. Just stronger than bear's breath. There's going to be some profit taking, but if it's just profit taking, more than likely, that means the majority of your long positions are still going to hold up fairly well unless there's a severe reversal signal. You have a website where I can get chart setup specs? Oh, I think if you go to www.candlestickforum.com, you should be able to get all the formulas from there. overstock. Needs to definitely open positive tomorrow. If it opens lower, now you're in this sideways drift right back to the bottom of the channel again. All right, everybody. Making lots of good money. So the technique in this type of market is how do I make as much money as I can while the sun is shining. I want to make sure that I'm not sitting with positions that are offsetting my gains, that I want to be rolling out of positions that aren't doing very much and rolling into positions that have a lot more strength in their signals. So with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.